What is going on, guys? Nick here, back with another video. This is not the video that I was planning to put out this week, but after seeing Facebook's earnings report and the stock price movement, I thought I'd just have to take a look at it and show you guys what I found. So Facebook reported its first quarter earnings on February 28th, 2021. They reported a beat on both earnings and revenue, and the stock has risen by about 6% after hours. They were expected to earn $2.37 per share, and they ended up with $3.30. Revenue came in at $26 billion versus $23 billion expected. And one of the craziest stats, even though this is pretty much in line with what was expected, Facebook reported 1.88 billion users versus 1.89 billion expected. Keep in mind that the entire world has a population of 7.8 billion people, so this is about 24% of the entire globe. Facebook also reported earning $9.27 in revenue per user versus the $8.40 that was expected. Going deeper into the earnings, Facebook said the revenue jump is due to an increase in the average price per ad and a 12% rise in the number of ads delivered. Going forward, Facebook expects revenue growth to remain consistent in the second quarter compared to the slower growth from last year due to the pandemic. But the third and fourth quarter will see a decrease in the year-over-year growth due to the fast growth in those quarters last year. This makes sense if we look at the revenue and net income in the context of the last 9 quarters. Now this is the reported earnings, but the first 2 quarters on this chart reflect a $3 billion and $2 billion fine that they paid to the FTC as a result of their privacy violations. So I'm actually going to add these back into the earnings so we can see how Facebook is doing without those one-time fines. So with these payments added back in, we can see the bite that COVID took out of their earnings growth. Facebook has been a pretty consistent grower, and we can see how the relative drop-off from the fourth quarter of 2019 to the first quarter of 2020 versus the last 2 quarters has a much smaller gap. If you don't already know, ad spending tends to increase in the fourth quarter of every year because of holidays. As I said earlier, Facebook expects year-over-year growth in the second quarter this year in line with the most recent first quarter beat, but we can see how the third quarter and fourth quarter revenue and the earnings growth has risen pretty significantly relative to their 2019 growth. So Facebook doesn't expect to beat last year's numbers by quite as much. I charted out the current earnings estimates for the rest of the year, but these are all from before the first quarter earnings release, so I expect that all of these numbers will be revised upwards. Facebook did note that their daily active users remained flat at 195 million for the second consecutive quarter. Some may see this as an issue, but in my personal opinion, it's more about revenue per user growing than the amount of daily user growth. At 195 million users and a total combined population of 365 million people between Canada and the United States, that's roughly half of the entire population that's considered a daily active user of Facebook products. This number includes elderly and young people, so I would consider the market pretty much fully saturated at this point. One of the bigger stories surrounding Facebook lately is their fight with Apple over iOS 14.5, blocking them from tracking users' information to sell targeted ads. Facebook said that this is factored into their forward outlook. My personal opinion on this is while Facebook is concerned, I don't really expect this to do much to their business long term. Facebook is still one of the very best ways for small companies and businesses to find customers, even if they aren't able to target customers as precisely. From my experience using Facebook ads in 2018, the targeting was more than sufficient. You were able to get ultra-specific targeting people with things like people who were engaged within the last 3 months, recently got a new job, got a new relationship, a new teen driver, or empty nesters. We still have to wait to see exactly how Facebook will be impacted by these changes, but since Facebook is projecting very strong outlook, I think that the concerns are overblown. So let's take a look at Facebook's overall performance with these new earnings numbers. So looking at the last 10 years of revenue, operating income, and net income, we can see really steady, significant growth with very high profit margins. One of the best signs of business strength is profit margins, because competition tends to drive them down. Facebook owns the network that they sell their ads on, and I think if you talk to a lot of people who use their ads, they still find it's one of the best returns on investment that they can spend their ad dollars on. When we look at the revenue versus expenses, we can see why they're able to have such huge margins. Their cost of revenue is extremely small compared to the revenue. Research and development, marketing and sales, and general and administrative costs have been very consistent even as revenue has grown. This is obviously a good sign since they're growing the business without increasing their expenses. Okay, so let's do a valuation update. But before I get to that, if you could please just take 1 second to scroll down and hit the like button, it really helps me out. When we look at the current earnings forecast, we don't yet have the revisions that should definitely come after their first quarter release. I went ahead and added 13% to the forecast. 13% is how much the revenue beat versus the expectation for the first quarter. But over the next few days, I would use the analyst forecast rather than these numbers. We can see that forecasts for Facebook's growth going forward are pretty significant, with 2023 projected nearly $50 billion in net income. This will put Facebook at a 2023 forward PE of 18.5. And I don't want to get too ahead of myself, but this is a pretty low number for them. Looking at revenue growth and the forecasted revenue growth, Facebook's growth is slowing, but 17% is still a pretty high number, especially when you consider that they're growing 17% from $145 billion in the 2022 forecasted revenue. So I think an appropriate growth rate for them is between 13 to 15%, which comes out to a fair PE range of 29 to 35. Over the last 12 months, they've earned $11.68, which gives us a valuation between $338 and $408. Going forward to 2021, the adjusted forecast I have comes out to $12.84 per share, which brings the valuation up to $372 to $449. Going forward one more year, I'm estimating Facebook to earn $15.36 per share. This gives us a valuation between $445 to $537, which again is well above the current share price. Now, if we look back at the PE ratio that Facebook has historically shown since 2017, we pretty much see that Facebook is trading right around these fair PE values that I've given them of 29 to 35. Now, I think a big trend in the market lately has been skipping ahead a few years and buying all of that growth up early. So, in other words, buying Facebook based off of 2023's valuation instead of the trailing valuation. Since last March, we've seen a huge run-up in small cap stocks, but I think there's a chance we could see the market shift back to some of the more boring large cap stocks that have mostly sat stagnant for the past 6 months. If that's the case, I think Facebook is a fantastic buy and hold stock right now with a strong moat and a very bright future. Now, I do own Facebook stock, no surprise, and I don't have any plans to sell anytime soon for all of the reasons that I just mentioned. Okay, so that's the video. It was a quick one, so I hope you liked it. If you did, make sure you subscribe and hit the bell notification so you know whenever I upload a new video. And as always, thanks for watching.